All right, good morning. October 21st. Welcome to the weekly meeting. All righty, good peoples. Hopefully everybody had a great trading week. If you did not have a good trading week, you need to find you a buddy who can point you in the right direction. Because there's no way that you shouldn't catch some pips. I'm not saying you have to execute your move perfectly. Maybe you're at the stage where you can only see it and you can't execute it. But these moves are coming in right as we kind of call them. Um, let's just look at it. Let's just look. All righty. I think there were plenty of people that might have been trading GN. GN is our one of the pair that we were trading. So I'm going to go back to Sunday. Okay, this is Sunday. Market opens. Trade pushes against us for 2 4-hour candles. So basically, the entire Asian session, the market drops. Right? We were bullish on the market, so this is perfect. The start of London session, you get in the trade, right in ICT's kill zone, right? If we drop to the hour chart, I don't want to drop to the hour chart yet. I want to mark this. This is 2300. You get the first green candle about midnight. We're in Germany, opens Frankfurt. Then you break this high right here. There's your chalk. Market pushes up, drops back down. Probably that second 4-hour candle. You could have got another entry, or you could have gotten the same entry at 4 in the morning. Could have got it again at 6 a.m. Then you have the New York kills on time. It gives you a bullish order block and takes off. Eventually, it pulls back on Wednesday. Again, London gives you another entry. And then it's off to the races. The last entry that you could have gotten, this is 1700, so that nobody would have taken that entry, or at least I know I wouldn't have taken that entry. So maybe you could have gotten in at London session again Friday. But hopefully, if you're in this trade, you're either holding it or your plan is to get back in the trade. I'm sure it'll get a pullback, maybe a small pullback, and then go to the TP. I believe the TP is probably 210 or 211. I know I have this. This is the golden zone. This is the top of the golden zone. So that's a 61.8. But it will probably go 210 or maybe even 211 before it turns to sell. For those of you who never really kind of paid attention, the time is going to line up, to where if you're trading one of the major sessions like New York or London, that you're probably going to get a very good entry, in that session, and probably 85% of the time it's going to be right at the beginning of the session. Every now and then you'll get that pullback in the middle of the session, but if you're swinging it, your entry is less important, because as long as you don't over leverage, you just give the pair time to correct itself, and it will keep pushing in that direction. This week may be a little bit different because it doesn't have that far to go before it changes directions on us. But we've been trading this since the beginning of this month. We've been trading this pair up. So for those of you who I guess this might have been your first time doing this, maybe you can tweak your strategy. And what I mean by that is the entry that we had down here, right, could have been you could have just held this entry. The only thing you're paying on that is just your swap fees. So, it really just depends on you as a person. Can you hold your trade? Do you trust it? Are you 100% sure that it's going to go your direction? All that good stuff. I know on the first we were over here and it pushed up, then it pulled all the way back. So I know a few of you had to close out. I know you had one of them entries at the top of the structure. You had to close out. But if you had got 2 entries or whatever down here, you wouldn't necessarily had to close out. You could have just got more entries coming up. But that is a lot of pips not to take profit, especially if you're not going to trade the move back. So you got the huge push up here, 300 pips. Then it pulls back 300 pips. Then it takes off, and we're at about almost 600 pips. So you could have got 3, 6. We could be at 1,200 pips since the first if you traded this both directions. Not to say that anybody's going to walk away with 1,200 pips, but definitely this 300. If you had traded down or hedged it, you would have realized, hey man, it's going to this bottom. So you would have still caught those sales, could have got another entry and got an additional 300 or additional 600 pips to add to those first 300. So if you understand that, or if you can see that, then here we are about 10 days away from a new monthly candle. And all we did was we looked, if y'all remember, we looked at the 6-month candle, and then we looked at the monthly candle, and we picked where price was going. Do y'all remember that? Who doesn't remember? Now's the time to speak up. Okay, so we looked at the 6-month candle. We knew we had to push down. We had pushed down into the 6-month candle. So we figured price would push back up to the top, right? We didn't push all the way down in the 6-month candle. We had pushed a little bit down, a little bit of the way down. So if we went to the monthly candle, we had a bearish order block. So we knew that price had to push up into the bearish order block first before we push down, if we're going to push down, right? Remember, the bearish order block is on top of the moving average. Let me delete this. So when I go back to the 6-month, we can see it. So we need for this candle to continue to sell, and this is the zone for that 6-month candle. This is where price needs to push down into for a discounted rate if this market is going to keep going higher. And I don't know if it's going to keep going higher. I just assume that it probably will. So I think we do need to push down into this area for price to go higher. Now, if we're just talking about healthy price action, wick to wick, then we've pretty much covered the healthy price action because we got that wick to wick touch. That is healthy price action. But everything is kind of lining up like we are going to go ahead and go further south. So depending on your analysis, and the way you see things, that's going to kind of determine the way you are looking to trade it. For me, this is the way I see it. I do believe we're going to go further down. So I am looking for the market to come down in this area. This is the 2-week candle. If y'all follow 2 weeks, we closed the 2-week cycle on Friday. So we have a fresh bullish order block, which tells me that, we need to push down into the order block, and we're probably going to go past the order block. So I personally think that the first move, we're going to buy up into our area. We might close this imbalance, but we'll push into this imbalance first. This is what I think. Then later on in the week, we turn and burn. That's what I'm anticipating. We'll have to see what the market does. If it just turns and burns here, then maybe I'll just trade it down and then expect it to keep going higher. But, I really think that it's going to go up first, then turn and burn. I think EN is the exact same as this. Maybe the imbalance is not the same, but you got the bullish 2-week order block. To me, it's telling that we didn't break any of these highs up here. So I would think that maybe we're going to go up first. We'll probably wick this high because that'll put us in between the golden zone and the 78. And again, we'll go further south. Just my thoughts on those pair and how I'm anticipating trading these. So I'll catch a sell on either EN and GN, or EN or GN, and if that doesn't play out, then I always got Old Faithful.
Hey.
Goldilocks. You can see the ridiculous move that Goldilocks put on us. So let me look at the 6-month gold chart. And here's the deal with gold. Gold push down. I would have liked to see gold take the liquidity, but that didn't happen. And due to the conflict over there, maybe that won't happen, right? But I do think we're going to go and take out these highs, and I think that at this point we are probably well on our way. I anticipate that's just too clean. that we're going to pull back the same way we did last week. We'll get a good sell. Hopefully it'll be right when the market opens, the same way it was last week. Did anybody trade that gold sell-off at the beginning of the week? Yeah. So if you didn't take advantage of that $15 fire sale, then maybe you can take advantage.
Hey, look, before the market closed on Friday, I said I'm gonna keep these trades open. This is the only ones, and I was like, I didn't expect it. I just thought that, okay, 1925 was cool, but 1930, that had to be it, and it just dropped. I mean, I was in probably at least $500 in profit in not even 1 second. It just dropped. Like, I mean, expecting that this week. It might do it.
Yeah, it dropped $21.
It dropped a whole quarter level.
Yeah.
So I'm thinking about that on GN right now. I'm thinking GN might do that on Monday or tomorrow. Yeah, it's possible.
Yeah, I mean, it's very much
But
possible.
it'll recover though. It'll drop down
I
there and
agree.
it'll go.
Well, the only reason I don't know about GN is because it dropped a bunch last week.
Yeah.
Did anybody? Well, that's GA. GA actually dropped. So you're right. GN has been kind of trailing with GA.
Yeah.
Let's look at GA because GA dropped. If we go to the daily, it dropped all these. It tapped in and it fell. That's like maybe 200, 300 pips. Two, 250, 244. Yeah. So maybe GN will drop 200 and 40 some pips. It tapped the zone, so maybe it will drop all the way down to the moving average. Maybe.
You see the occurring theme in multiple pairs. Every one of them is doing it. Even the dollar did.
Yes, maybe. So that would make sense. I can see that because maybe we won't get the sell move until the first of the month, right?
Right.
So on the month, yeah, maybe this candle would just be this monthly candle will end up here. So I mean, yeah, I can see that. I can definitely see that. That does make sense now that you bring it up. So that would actually be very good if it drops and then buys up heavy, Maybe it'll end with a bullish order block too. Who knows? So
And
that's
you know
another.
what? And you know what I've been starting to notice? Like you can see it here. Like you see that wick way up there to the left. And now you see bodies going up there, right? The one in the middle, you see that wick up there in the middle, down there at the bottom, those wicks that are hovering, and you see how the bodies are up there now. And now you look at where price is. See, that's what we're doing over to the right now. Those bodies are ending up where that wick to the left is. So the volume is over that wick. And then the example that you have in the middle there is giving you an idea of what happens when the bodies start getting up to the level of that wick. It's trying to get the price is trying to really, it's accumulation. It can't help but to go up. And then eventually you're going to get this long wick retracement, just like every serious top is going to give you a serious wick. And that's how you know it's done. And it's going to take all those candles, it's going to curl under just like it did before, and then try to go and approach the wick again. Yeah. So the bodies are getting up. It's a good sign because wherever this top is, you're going to get hella pips on the way down. You just need that wick trail to come, right? And it's going to be a long candle. We see it. It was the long candle, and then the middle pattern was a short candle. Now we're going up. We have long bullish candles again. It's going to end with a super long bullish candle with a wick trail. And we're almost there, if not there right now. But the only reason why I'm having a problem with it right now is because the bodies are starting to elevate above that wick over there. So you got to be real careful about that.
Well, this move in itself,
that's a break and retest.
It is.
So it makes it there
but,
too.
Well, yeah. I just think we kind of have to. We're gonna have to take the wait and see. But I think it's good to have both perspectives. What to look for a buy, what to look for a sell. At the end of the day, it has to do a chalk before it does anything.
Right.
If it doesn't chalk, then you don't have to worry about it.
So beautiful.
And that is a beautiful thing. We've caught 544 on this, like on this month. I remember all of us talking about this pullback. So if we did nothing but put in a $2 buy up, you'd be up $1,000. And it's not a big deal if you didn't, but the thing is now we see it. It's kind of like trading that 6 month candle, right? So what if you didn't execute it properly, or the thing is we saw it, and here in December we get another close of a 6 month candle, and now we have an opportunity to trade it properly, right? So I think that actually going back and looking to see what happened is a beautiful thing, because it gives us the ability to do something different, the next time around, right? I don't know if we're gonna go higher or not, but if we're gonna go higher, I think the first step is we got to break this high, right? And I think if we don't do it, then I'm looking for us to go short.
Yeah, I want the short, definitely.
But here's the thing that kind of makes me feel like we're doing short too. This is the end of this 3 week candle, right? So this next candle, maybe it just pushes. You're gonna get the wick, and then the sell.
That's at 210, right?
Well, the 210 is somewhere in here,
Right.
but I can see it going up to this candle wick right here. You see that?
Yeah, 211. That's what I'm. Come on, if y'all don't catch this move, I'm just saying.
And then selling. So that, remember me and you talked about this a little bit Friday, I think.
Yeah.
Yeah. So this candle, this 3 week candle is done. So this new candle needs to go up. It's probably going to wick to wick right there at 211. And then I think, we're going to get the bearish move. But, whenever you say it's going to keep buying up, it gives me pause, because I mean, maybe it could sell first, then push up.
I've seen in the past where that 220 area, yeah, it'll be a candle. I haven't seen it yet. We need to see it, right? I don't know what pair it was, but it was either 220. I want to say maybe it was AJ or something like that. Something wicked all the way up there. I want to see this happen because I want to know how fast it was. How long did that take to go wick way up there out of the way like that? And now you go back in the past and you see this wick up at 225. How did that happen? What happened in time at that time? And how fast? Was it an hourly push? Was it a weekly? What was the time frame when that thing actually wicked out at the peak? Because it was an anomaly for real. And then it was a bearish candle. Like, okay, so it went all the way up there and came all the way back and then went down. Come on. I need to see that.
It had to be a news event, you would think.
Yeah. Because it's still, the quarter level is perfect. So it's not like you can't catch it. So I'd love to see that.
Yeah, this will play itself out. And if you're trying to follow this, then you have to. I mean, you got to periodically look at these things. I like to look at these higher time frames because it gives me confidence trading in a direction. I don't like trading blind or trading. I don't know how long this is going to go, or I want to know where the heck we're going. So, the confidence of the trade is there.
Hey, do
Okay.
me a favor.
Yeah.
Let's look at EU right quick. Because EU has the same type of price structure, but it's instead of $2.10, this will be $1.10, right? What happens to EU when it gets around 110 and how it breaks down? See, this was 112,500. The next level up is 112,500 for 110, but all the bodies are staying at 110. This is exactly what we're looking at on GN. It's going to hesitate just like this at 210. But you see how nasty and choppy it is, but it's still 110, right? And it even did the liquidity sweep and fell off at 212,500, the next quarter level up. It wicked it, and that was it. As long as you get in at 110, you're Gucci. If you get in at 208,500 for GN or 210 for GN, you're Gucci. It's ready to break down. Yeah. And it ain't just going to break down. It's going to be choppy. You could talk about GU. GU went to 130 and then went to 131 and broke down. That's what they do.
This is probably what this is going to look like. We broke these lows. We broke this low. Now you can go up and fill the imbalance. Like your boy ICT said, come up into the imbalance and get short.
You see it all across the market.
Yeah. Here's an imbalance down here that needs to be filled. So
hey,
I would trade it like this, or I would, if I was trading EU, I would look at it something like that. Now, of course, you got to drop down to the lower time frames to get better, to get exact detail. But
and look at the chalk to the left. You saw the chalk, right? When it went to
wait. Let me go back. Let me go back.
See the imbalance to the left?
Yep.
It went up there and wicked into that big candle over there to the left. That was the catalyst candle, the one that broke down from the structure.
Yeah.
And then, yeah, that's where it wicked. This is what we teach. You can't miss that. You look at the structure and you're like, well, it's a 3-week chart, but still, out of all them candles, and you get that wicked up there like that, and you look to the left, you see it. Come on.
This imbalance is right by the 78. It all makes sense. It's all symmetrical.
Hey. And like I said, we push you to be great. I'm not trying to badger people. It's just, it ain't hard. It's just not. You got to start winning and get past the psychology, what we call the psychology of it all. No, it shows you clear. There is no psychology. We're lying to ourselves. We got to stop that.
All right, this was the gold move on Sunday last week. And then the super buy, right? Notice we broke all these highs. So we need to pull back at least into this imbalance is what I would think. Let me just throw the fib on this joint. Looks about right to me. 78. Yeah. So 1933-ish. That would be a great pullback. That's some good little money right there.
And don't give gold an advantage, because that's the safety net. You can depend on the safety net.
And on this 2-week, if you fib this 2-week chart, if we pull back to the 2-week chart, it's going to be a bigger move than that. So I would I would look to trade this joint. Here's the golden zone. Here's the 78. I have the arrow marking up to the imbalance that would be filled if it comes way back down to this direction. I think that this is probably the greatest trade, because the room for error on this is huge. Maybe it bounces at 19, 35, 33, whatever, at this first imbalance level. But that it needs to at least come to the discounted zone before it breaks higher. So I would probably look for a sell first. I don't know how bad the dollar dropped. Okay, the dollar dropped, broke these lows, came back up. Probably at 78%. So maybe the dollar needs to push back up into this imbalance.
And it's a triple bottom.
Yeah.
Fourth time, it's out of there.
Yeah, maybe the dollar is just going to rise. So I would definitely look to sell gold down. If we don't know anything else, then you can catch this $50 holla.
They think they cute too, boy. Touch 97. They didn't touch 2000. This for the people. You got to understand what that means. It
This
ain't up
come all the
here.
way down.
It's not up here to touch 2000. It has to touch it. So when you get this pullback, it is money. It's like when it's at 1950, just like the first time it got to 1950. You think it's going to come all the way to 1950 and not go to 2000? Come on. This is life. This is what gold is. This is like we get to see, like, without this, we don't get to see this, right? It has to go to 2000. It has to go to 2100. It has to go to 2500. It has to go to 3000. So you catch the pullbacks. Now we have a floor in the perfect timing of October, and it has nothing to do but go bullish. So you catch every healthy pullback. Hey,
Anybody have any questions for him?
and it trusts the quarter level. So when it gets to the quarter level, you can take the sell with you and then catch the buy. After a long move like this, you're probably not going to see another leg like this for a little while. So now it's going to go back into its healthiness. Now it's going to bounce in between the quarter levels like it's supposed to. Because now that it's done what it's done, oh, it's going to 2100, and then it takes a month to do that. It's like it's going to be bouncing between these quarter levels right now. I just needed to do this to let everybody know, hello, I'm awake now, and now it's time to get back to business. All right.
We got 10 days left on this monthly candle. So maybe we hang out up here and then we get the long move at the end of the month. I don't know. But it's very interesting. We got the gravestone doji or whatever. So maybe we go a little bit higher. Maybe we go into this wick first before we sell. I don't know how that's going to look. But either way, those are the good looking moves. U.S. oil is a good looking move too, but it's kind of a different shape. So this is another war driven deal, but for whatever reason, it did exactly what it was supposed to do. You get the bearish order block, it buys up into the order block. It to me, I would have liked to see it come higher, but it didn't. So I think that there's a chance that we just go into this order block and we go lower. On the higher time frame, I know we have 10 days left, but maybe we push back down into this monthly candle. Maybe we don't get the move until somebody, until somebody else enters that conflict over there. But I don't necessarily like the way that this move is shaping up. It's unless we just get an explosion and we start like pressing to the upside. I I'm not going to be a participant trading this down because I don't necessarily agree that this price should start going down with all the mess that's going on over there. And then we got people talking about they about to get on their feet and walk through that Gaza Strip. Um, it's too much, too many oil countries over there that don't like the U.S. So I think that the only way I'm trading oil is to the upside. So if I don't see the bullish moves, then I'm not trading oil. I really think that anybody who's selling oil, while we got feet on the ground over there, that y'all are brave because um, all it really takes is one one news report of somebody, like Iran or somebody, doing something crazy, and then maybe we'll get a $10 push to the upside. But if you're trading oil and you're selling it, just be careful. I know we have some oil people, oil folks, and oil pays great too. We just have to make sure you're on the right side of it. Okay, I don't want to take up the whole time, but I'm going to give people an opportunity to break down their pairs. I would be remiss if I didn't say that we got bearish order blocks on the nasty Nasdaq, which is great. I love to see that. I love.
Let's bring it up. They said that tech was going to take the biggest hit. That's what they said.
I love to see it.
Gold is out of there, and they're pushing down. Why? They should be pushing up like gold. It's delayed. It's wavy. Now Nas gets to go down there and pay the piper. Gold already did it, right? Wavy, wavy.
And if that dollar goes up, like this is a bearish order block to me too. I know some of y'all don't count the dojis, but I do, and to me that's bearish. Uh, the only thing that I don't necessarily like is that on the US 30 and this the S&P is, if you're on a lower time frame, this could be seen as a bullish move and a pullback to go higher. We are going to go higher. We're going to buy back up. We're going to retrace these moves, but I don't think it'll be for a long period of time. I think we're still going lower.
And for the record, that includes Bitcoin and Ethereum.
Bitcoin hit 30K. Huh?
Right. You can catch the sell up there. It's opposite of the NASDAQ and SPX right now when it's actually following the same thing. They're the same. So you're getting the cryptos at a discounted rate because they're pushing in an upward direction. They're going to fall. So they're going to end up looking like this. But it's going to be quick. They recover. It's tech. Of course it's going to recover.
All right. Who wants to break a pair down? Give me 2 per. Hold up, y'all. I know good and well that folks want to break their purse down because I see them out there making that loot. They be calling their moves. Brett.
I'm loving it. It's also a testament to like, what are you really doing? Like, are you here to say hello every day, or are you really trading? Like, you need to be trading. I'm not gonna let it slide. I'm not on you, but I'm gonna always talk shit about people who are lazy. So if you tapping them bones, and that's cool, right? We need to do that because you need to be accountable. If you say you about that life, you need to step your game up. Coming in here every day. You come in here every day and say hello, and you ain't made $1 yet. Come on.
I guess I'll go. I had a few questions.
Share your screen.
Okay, what is this? EuroCAD. I was looking at this and gold. When I was looking at EuroCAD, my question was, where do we look for imbalances? I thought I was sharing. So are we looking for imbalances on our lower time frames or our higher? And the reason why I asked that is because when I looked at the lower time frames, I didn't really see an imbalance, but I saw it on the weekly.
Where's the imbalance on the weekly?
Right here.
Right where? Okay, from where to where?
I would say from here to here.
No. Where's the imbalance? From what wick to what wick? You ain't gotta move you're right where you're supposed to be. Bring your pointer back to that candidate. See that wick right there?
This one?
No, the one that bring your cursor back down. The bottom wick of that candle. All right. Put you a line. All you got to do is go to ray. Go over there, get you a ray, and shoot you a horizontal ray. Not that kind of ray. Get a horizontal ray so it'll shoot it straight for you. Now, where is the next candle? Where's that wick stop? The top of the top wick. Because
Right
the top wick should go up there and touch with that ray, right?
Mm-hmm.
Did it go up there and touch it?
No.
So from that top wick, shoot you a ray. Now that's your imbalance. Your imbalance is between those two rays.
Okay.
Now, what many people will say is the 50% mark in between those two rays is consequent encroachment, or considered.
I hear you. I'm just changing color.
Yeah, that's considered to be closed. So what you need to look at is where is the 50% between those two rays, and you can go get you a GAN box from there you go get a GAN box from up there. You started at the top at one of those, at either one of those red lines. You start at the red line and go to the other red line. And you see that where it has the 0.5. Yep. You can shoot a ray across there if you wanted to. I know this is a lot of lines, and this might be too busy for some people, but until you figure it out, you need to mark all this stuff up, and you do it when you see the imbalance. You don't wait for the candles to start forming after the imbalance, because now delete that GAN box. Okay, so if you saw this 1, 2, 3, 4 candles ago, you see that one candle with that long wick at the bottom?
This one?
Right. So if you saw that and you said, man, there's a imbalance, I can buy this up to the consequent, to that line right there. You would have hopped in with some confidence, that next candle, and you'd have got paid, right?
Yeah.
So that imbalance is the imbalance that we needed to trade into. If you remember, I don't know which video you're on, but ICT 2022 mentorship video 3 says that when price trades back up into the imbalance, you can get short because you broke the swing low, right? This leg, that down leg of candles, did it break a swing low?
Yeah, I broke this one.
Okay, so now you
and right, it didn't just break that; it broke more than just that. It's very important. That adds to the strength. What if it only broke the middle low? That's one thing, but it broke that and the other low to the left,
the
or
the
candles not in the picture. Are those candles not in the picture? Or
yeah,
no, they're in the picture.
Okay, yeah. So that's it increases the strength of that wick. Every time it was at this level, it went to resistance, not just to your imbalance. It went to the top from here. And it showed you 2 other instances that that's what it did. So all you had to do, like he said, when the candle came for you to enter, all you had to do was cover the wick right next to it because of what happened to the left. That enhances your bias. Yeah. So now, because you trust what's over to the left, let's say those candles to the left weren't in the screen and all you've seen was these. The reason why you can trust these is because you already look to the left. You see that there's respect right there. So you don't need those candles anymore. The wicks and everything that's in this structure right here correlates with everything you see to the left. So you don't need that anymore. You need what you have right here. So you can see the wicks in the structure. You can use the green wick right next to the red candle, and you can use the red candle. You're not using the bottom wick. That's the bottom. You don't need that wick right now. You just need the wicks that are right around you, right? You're coming into that little scope, and then you're working your way out of that scope. And that's what it did. It came out of the scope. It went to the imbalance the way it's supposed to. It was healthy, right?
So
Go ahead.
the highest it could possibly go is here, and then it's going to.
I don't want to talk about highest it could possibly go, right? You're biased to see a certain thing happen, right? You're biased to see price come into your zone, right? And we're in your zone right now.
Yes.
It could close it. It could completely close your zone, right? What if it goes higher than your red line? What are you thinking now? What's
It's going to go to the 78.
Well, or it can go to the 78. Exactly. What's at the 78? See that wick at the 78? Just past the 78? There, we don't know how many buy stops are sitting there. It could be significant. Maybe they go after those buy stops and it wicks past that wick and then it sells. Right? Yeah. So your job as a trader is to understand advantages and likelihoods. Your price is in your zone. That doesn't mean that we just sell it, but it is in your zone. So now you're watching for chalk, change of character. You're watching for price to break lower, then come back up, and then break and keep breaking lower, right? And it's going to do it on the lower time frames first. Then it's going to do it on the 4 hour. Then it's going to do it on the daily. Then it's going to do it on the weekly, right? It's going to cascade through the time frames. But now that it's in your price range, now that you have consequent, what do they call it?
Consequence encouragement.
There you go. Yeah, that's Leandra's favorite word. Now that they have that, now that you have that, you need to watch. And what needs to happen for this to actually be consequence encroachment or whatever? We need to have that. The body needs to get out of there. So it needs to leave a wick right there, right?
Yes.
So did it leave a wick?
No.
So to me, that, it tells me that we're probably going to go higher. Like we're going to go deeper. Maybe we'll close that imbalance. So maybe we'll get a up move, and then maybe we'll get it to sell down. I don't know, but that's what I would lean towards. I don't know where the moving averages are because I can't see them on your screen. But and there's nothing wrong with you trading without moving averages, but you just have to be more disciplined and wait for your confluences.
So where do we look for imbalances? Does it matter on the
Well,
higher
you
frame
can
or the lower?
you look for them when you see an impulse move, right? Sometimes you're going to get an impulse move, and it's going to be healthy price action. So it means nothing. Your only attention should be towards the moves that leave the imbalances. So drop to the 4 hour. So you're saying you didn't see any imbalances on this 4 hour chart?
Here.
Well, there's a great wait. That imbalance is already taken care of, isn't it? Didn't price trade back up into that? Your imbalances that you're looking for. In fact, make this bring the screen over so we can see more of those candles to the left. Okay. You don't see any imbalances higher? Yes, there's an imbalance right there. You see, wait, point to the imbalance. Oh, folk, man, you're lost. That's not an imbalance because look to the right. There's a candle right there. It was an imbalance. That was an imbalance. Okay, that's the only imbalance that's left because there's not been a green candle that trades up into that point, right?
Mhm.
That's the only imbalance that's left.
And
Now,
ICT
That's
also
that's
talks about,
confusing to me because it's past 78.
well, your 78 is jacked up, or I mean, it's different 78s. That might be 78 on a 6 month chart, right? Like what date is that? August 31st? The 78 you have right there is on a monthly candle. Don't get confused. Remember I told you new people get confused when they start switching through time frames.
Yes.
And you sending me screenshots from the 5 minute. I'm like, man, stay the hell off the 5 minute. Because look, man, in order for this stuff to make sense, we have to keep our focus in a specific area. And when we start jumping from that area, we lose the focus. And it's very natural. This is normal, and this is just part of the process. If you go back to the monthly candle, hit the monthly chart. So the reason that 78 doesn't show up is because you only fibbed the monthly, that red candle, right?
Mm-hmm.
So of course that imbalance is not in your purview because what you wanted to do is take care of what you see immediately in front of your face. And that's fine. So you don't see any imbalances. That's cool. I still see imbalances on that 4 hour. So go back to the 4 hour. Okay, you have a green line going through your chart. Point to the green line. Now, ain't that an imbalance right there on that green candle?
Yes.
Do you see it?
Yeah, there's no candles
Okay,
around this area.
that imbalance should be taken care of. Now, that impulse move up that your finger is on, it's an impulse move. Go to the bottom of that move. Go to the bottom of the move. Now, impulse move up. Go ahead and go up. Keep going up. Go up. Keep going up. Now, at that point, have you broken any highs?
This
Oh, you've broken some highs, huh? So have you pulled back? When that pull back, did that go to that imbalance? If you
right
put a
here.
fib, yeah, if you put a fib from that impulse move up, what was the pullback? From the
From
bottom of
here.
that move all the way up there to the top, fib it. Right there where it had the GAN box. So it pulled right back just to the discounted area, right? Now you need to drag the fib, no, drag the fib all the way over. Drag at the top, at the top, at the top. Grab the top of that fib. Keep pulling it over to the right. Pull it, pull it, pull it. Keep going, keep going, keep going, keep going. Now, wait, bring it down though. Don't bring it up. Bring it back down to the high that you were fibbing. All right, right there. So this pullback, I mean, you wicked the top of the 50 barely.
Right here.
Yeah, did that even touch the 50? Probably not. So to me, eventually this is you need a real pullback. So pull the fib to where it is right now.
What do you mean pull it to where it is
Like
right now?
I'm talking about the high. I'm sorry. Pull the fib to the high it is right now. Go pull it over though. Get in the practice of crossing this up. So if you get a pullback, the 61 is to the imbalance that you see, right?
Yes.
So that's really a move that you want to see. Whether this is going to sell or go higher, the first thing that needs to happen is you need to get a pullback at least to that area, right? Now the higher time frame, the monthly, told you what? Oh man, you got to know. Are you just looking at that monthly chart just to be looking at it?
Mm-hmm.
So
I'm not ashamed to say I don't know what.
you see
That's why
the
I'm asking questions.
you see a bearish order block? See the bearish order block?
No.
Okay. Ignore the green candle. Ignore the last green candle. The red candle right there that's larger than that green candle is a bearish order block. That tells you that the market needs to push lower. You understand that?
No.
Okay. I'm gonna stop your sharing and I'm gonna pull my screen up because I need to be able to move through this and show you.
Yeah, I keep forgetting she just started, but still, it's great because you're gonna get, without having to go into the rabbit hole in YouTube, you get to physically speak to someone that can actually walk you through it. That is going to streamline everything. This is how it needs to be done for everyone that's new.
Okay, so we're on the monthly, right, folks?
Mm-hmm. Yes.
So the first thing that I like to do is squeeze the chart together, right? So I'll know what needs to happen. So from a very high time frame, I can see a push up, right? And a pullback that's probably close to 78. So I would like to see this push higher. If I fibbed from here to here and it came back, I want to see it push higher, right? That's super high time frame. I don't really worry about that at this point. On this lower time frame, which is the monthly, I see an impulse move here that broke highs and came to relative equal highs here, right? I see an imbalance down here. Impulse move, you showing me you pulling back, at least pull back to this imbalance. Impulse move, the imbalance will give me basically a 61.8. You can do what you want. You can push up after that. Maybe you push lower, right? Because at the same time, this impulse move broke this swing low. This pullback was a good pullback from here to here. Impulse move down, pull back close to the 78 to push lower, right? It doesn't matter what your bias is at this point. Whether you're biased for that buy or biased for that sell, they both say the same thing. Price needs to sell down and close this imbalance. And don't get lost in the weeds arguing with people over which way it's going to go when there's 793 pips available to catch right now. Okay. So don't worry about the super high time. That stuff will work itself out. What I was trying to show you on this chart is what a order block is, right? Green candle, longer red candle tells us that the market is going to go lower. All right. What do we expect? We expect the next candle to push into the order block, then drop. The next candle does not do that. It pushes lower. This candle pushed right into the order block, right? If you fib this candle, if I fib this red candle, like we would have done, we would have fibbed this candle, right? Folks, am I right? We would have fibbed that candle?
No, that's where I'm being lost because
Okay.
we fibbing all the moves and then we're fibbing candles and then we have a higher time frame and then
All
a
right,
lower time frame.
stop. And this is where you need to open your ears and close your mouth and listen to this piece.
Okay.
Whether you're like this monthly candle is a whole move on the 4-hour time frame. Let me say that again. This monthly candle is a whole bunch of 4-hour candles. Okay.
Yes.
So when I fib this monthly candle, I'm actually fibbing an entire move. Say that, say what I just told you.
When you fib the monthly candle, you're fibbing a whole move.
Okay. I just fibbed that monthly candle. You see the move I just fibbed from here to here? That's why we fibbing candles on sometimes, and then sometimes we fib the move. Now, when I fib that monthly move, that monthly candle, you can see how that was an impulse move that broke this low and broke this low and it broke this low. You see that?
Yes.
Which is why we expect for price to trade back up into what? This imbalance, right?
Yes.
Ain't that what you expect? So let's go back to the monthly. The very next month, it did not trade back into that imbalance. It traded further down. It didn't mean that our analysis was wrong. All it meant was we can't press the buy button because it didn't give us what we needed to see until the end of that month. You understand?
No.
You said no?
No.
Okay. This is very easy. And I know it's other people who don't understand. I'm glad you're bringing this stuff up. The analysis was that we had traded down and we needed to go back into that 4-hour imbalance. We had traded all the way down here. We needed to trade back into this imbalance. So we were biased for price to trade back into that imbalance. You understand?
Yes.
Instead of price doing that, price went further down. And then when it gets down here, guess what happened? This impulse move broke this high. It broke this high. There's what we call a chalk, right? CHOCH. You tracking?
Yes.
Do you hear people say that?
Yes.
Okay. This wick represents the chalk. Once you get this chalk, what do? You fib from the bottom to the top because you expected to pull right back to your 78 to let you buy. Where are you buying this to? Come on, forward. Where are you buying it to?
Where am I buying it to?
Yeah,
I would hope the golden zone at the top.
there you go. To this imbalance. Now, the only thing I didn't do here is put my GAN box and find my consequential, whatever. Say it again, Leandra. Your encroachment. Now, is this a breaker block? Is Alicia here?
Consequence encouragement.
Okay. Yeah. Hey, hold on. The paladin guy is here. So let me let him in. So y'all bear with me. Hold on. All right. So you're still expecting price to push into this area, right?
Yes.
Now, if you just took this entry and you waited for your pullback into your 78 and you took an entry from right here, this is god dog near a 9% gain just because you waited and you understood what you wanted to see from your monthly candle analysis. So now you're just allowing this thing to play out. Even if you just had one entry, you just allow this scenario. I wonder if we can get I need to get on a different time frame because I don't want to watch this from the 4 hour. Okay. Does that make sense? You see how that works?
Yeah.
Well, don't just say yeah if you don't understand. Price comes right into it, right to where we thought it was going to go. Not because I'm smart. It's just because I understood what I'm looking for. We are this leg down told us by breaking all these lows, hey, we're going to go lower. All we have to do is wait. We can buy it up. We would have bought it up here and we would have sold it down from here to go lower. We could have sold it back down to equal lows, or you can sell it down to the next low, right? One of these lows over here. So let's go back because the market gives us another opportunity. See how it's going to give us a green and then a red candle. You see that? It gave us the same set. This is the same setup. You see this green and red candle?
Yes.
We expected to trade back up into the imbalance. So what should we expect now with this green and red candle?
For it to trade back up into the imbalance.
Well, God dog, you can see how this is like taking candy from a baby. This is easier than you going to work and listening to them people tell you what to do, ain't it?
I don't want to talk about work.
Well, that's what I'm saying. So look, this is all I want to show you.
And you have fun with it, right? It's you haven't made it your own yet. As simple as you just said that's as simple as it is. It takes time though, but so you're gonna start seeing it happen, and you're gonna get motivated, and then it becomes your job. It's a job that you love to do. Like it comes out in your emotion, all that, the energy, all that. It's no more downside, it's upside because you're seeing it play out. It's like it's a computer. So it's going to continually do what it's supposed to do. You have to get on its time. Can't be on your time. You got to get on its time. That
Right.
means you get elevated. You get into motion. You're ready. Yeah. Then when that bank account start elevating, you really gonna be talking.
So this is you marked your 78, you marked your zone. I can see from this higher time frame that chalk has already happened, but price is moving up at this point, right? You can already see you got this imbalance going. So you want to let price come back and pick you up. Well, this is probably the zone that you didn't get picked up at. Again, the buy, in my opinion, the buy is not the prize.
Right.
The sell is the actual prize. So you wouldn't have gotten picked up for this buy, but it's okay because you're in other stuff like you're in GN. But this buy is now in your zone, right? In your area, because this is the 62, this is the 78.
Right.
So it's in our zone that we're looking to take the next down leg of this, right? And where is this going? There's an imbalance down here. So you will be able to sell it down into the imbalance.
Okay.
And all by taking your cues from these candles. Does that make sense?
Kind of. I'd have to like keep looking at it.
Yeah. So whenever we post this video, just keep looking at the video because
keep recording or going back.
Eventually this is going to hit for you. And by you asking the questions, you probably help 13 other people because you're not the only person that doesn't quite get it, or maybe you can't quite see it. The problem is going from one time zone or one time frame to the next. Once you understand that this candle on the monthly is actually a move on the 4-hour, right? And the candle on the 4-hour is actually a move on the 5-minute or the 15-minute. Then you'll understand how to go and look for what you need to see. And then the next problem you're going to have is where the hell can I trade it to? Where do I take the trade to? And all you have to do is understand every time frame has imbalances. And if it doesn't, then it's not important. Then you need to trade a lower time frame, to a lower time frame imbalance.
So that's the answer to my question. Where do we look for imbalances?
Well, you should be looking for them no lower than the 4-hour.
Okay.
You shouldn't be on those lower time frames because you're going to find confusion down there.
And the same thing for the highs. When we look to the left, how far are we going? Or it really doesn't matter.
Well, you got to go to your immediate highs and lows, right? So as a trader, I understand that this is my swing high, this is my swing low. This price can't go anywhere without breaking one of these two. Now,
and that swing high is in what, 2020?
Well, it doesn't. Who cares? Who cares?
Okay, that's what I'm saying. So it doesn't really matter.
No, listen. That
the
is your
price.
swing high on this monthly chart. This is your swing
Okay.
low on the monthly chart. Now, on the weekly chart, it's going to be different. This high right here, these are equal highs. This is your swing high. This low is your swing low. The time frame is a little bit closer because you got to break these highs before you can even get to that monthly swing high up there. So price is still between this high and this low. So it has to break either one. And if you feel like it's going to break this high, right now it's pulling back. It gave you a lower high. Then you have to expect that price is going to pull back first, pull back to your discounted zone. Did ICT talk? You heard that? Have he talked about discounted rates?
Yeah, I think he does that in the beginning.
Okay.
His
So
first
you
couple
know
of
that price needs to pull back at least to the 50% before you go higher. Because you were going up, you got to pull back, and this high is lower than this high.
All right.
So price is telling you it's pulling back. So where is it pulling back to? Your discounted zone. Oh, my discounted zone. That means I need to drop down in time frame to see if I have any imbalances or order blocks in my discounted area. Then you can look down here. Oh, there's an imbalance here just below the 62. Chances are if price comes down here to fill this imbalance. There's an order block down here. There's an imbalance right here, right at the 78. So you understand how once you understand the move, you can drop down to your time frame to look for imbalances or order blocks in your area of interest. You understand that?
Yes.
And this is just going to be a constant process, but you have to do the work. It's not going to work if the only time you see this is on Saturday when I'm doing it. Like, you have to actually go in there and you have to do it. People say back test. That's cool. You can back test it, but forward testing is the best way to do it. And you can forward test on any time frame, on the 2-week chart, on the 3-week chart, on the monthly chart, on the daily chart. There are plenty of pairs that are going to give you setups every week, every day, every month. And all you have to do is just keep looking at it. Okay, I think that's going to go from here to here. Mark it on your chart. Set alerts, set alarms. So when the alarms go up, you're like, man, this pair went exactly where I thought it was going to go. Your confidence will build up. And we're going to keep talking about it every week because this is just how it works.
Okay. I think my issue is, like I said, knowing what to fib. The whole impulse move, a candle, like.
Well, I think I just explained that. The impulse move is the candle. So yeah, I would say, yeah. Do you feel the impulse move or the candle? Yeah. Because depending on what time frame you're looking at, that candle is your impulse move.
So over the last week, I've been working on the 1-minute chart, and this is not recommended. There's an intention, right? Because it's not recommended for anyone to even try to trade the 1-minute chart. But the 1-minute chart plays out the scenarios of Wyckoff over and over and over again. And if you just sat there for 10, 20, maybe even 30 minutes a day and watched how the 1-minute chart breaks highs and lows, goes into an impulse move, comes back and collects the chalk that it just created, goes and breaks the high, goes and creates a double high, comes down and creates double lows, breaks either the high or the low. You'll see it doing all the scenarios over and over and over again. And then you're like, okay, it's supposed to do this, 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 and this. And then you go on the 1 minute chart and you look for that over and over and over again. You'll start seeing that it'll do it maybe 5 different ways.
Yeah.
And then you'll start seeing each one of those 5 different ways. And as you start seeing that on the 1 minute chart, you're going to start seeing it on the higher time frames. And you're gonna be like, this is supposed to go here because you watched it do it on the 1 minute chart so many times. You're like, okay, even the longest of moves, these are still the same moves you see on the monthly and the 6-month chart.
Working the way up there.
Yeah, it helps you see where it's supposed to go. All right. So I challenge you to just sit there and watch it do that. Don't even take the trades. Just say, oh, it's supposed to do this, 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 and this. And you watch it over and over. Okay, it did that, it did that, it did that. You constantly seeing that it is doing it and it's proving it to you really quickly.
Yeah.
Yeah.
That should be the only time you're on them lower time frames.
Okay.
Because you have to find out what's correct. What is it supposed to do? We're trying to say impulse move. An impulse move. That means it goes from point A to point B quickly and then just stops and goes sideways. That's what it means. Because when it stops, it has to go into a Wyckoff pattern. And then it's going to break out of that Wyckoff pattern. Which way? It'll tell you. It's going to either break out to the top of it or the bottom of it. Okay, when it breaks out the top and the bottom, where is it going? To some point of interest. At the peak, it's going to the way top of the structure and it's going to the way to the bottom of the structure. On the 1 minute, it's going to do everything, right?
Oh, yeah,
So
I don't think she knows what a Wyckoff pattern is.
Yeah, I was gonna say.
so people don't know what Wyckoff is. It means that the market is going sideways and it has to break out of that. It is a Wyckoff pattern. You don't have to know what Wyckoff is. You just need to know that that's what's happening. It's going to go into this level and then it's going to do this pattern and then it's going to break out of it. That's Wyckoff. All right. You can learn Wyckoff later. You just need to know that the impulse move is going to take you from point A to point B, and then it's going to chalk out, and then it's going to get out of there, whatever direction it chooses. It'll show you it because it'll leave the chalk, and then it'll come collect it, and then it'll go in the direction it's supposed to go, constantly over and over and over again. Right. And then it's proving it to you. Okay, it does this. I know it does because I watched it 1,000 times. This is what it does.
Right.
Yeah. Whatever pair, it has its own pulse to it. But they're the same. It's just that they do them in their own areas. Right. Some of them are correlated. Some of them get off correlation. Some are late. Some are early. Right. You'll figure it out. You got people around you. You're not doing this by yourself. So you got solid information coming out around you and you're proving it to yourself. Right. Step on in and let it happen. And then you're on the right side of it, just like everybody else. We find the next person when we get them up to speed and we keep going.
Thank you. I appreciate it.
So does everybody have a move that they trade next year? Everybody know what they trade? Oh my God.
Yes.
What?
I said, does everybody know what they're trading?
Oh, yes.
Yes.
All right. All right. Y'all got any more questions?
Yeah, does the white cloth play on the replay? Am I echoing?
I don't understand. What does it play on the replay? What do you mean?
Does it replay on the 1 minute? I'm sorry.
Well, you probably have to buy 1 minute replay. There's not enough data. They're not going to let you see that. What is your account? What is your account level?
Yep.
Huh?
Yeah, but if you just look back at the 1 minute, like on the day or even during the week, you can just go back and look at it. Do you know what I mean? You don't need to replay it.
That does make sense. Like if you just, whatever pair you're looking at, if you just drop to the 1 minute, it'll show you what's left. You're not going to really go back a month and look at it though. No.
Yeah. because you want to forward test, but also if you haven't got time to forward test and look at the charts, then you can always on that day, like of market close, you can just go to that pair, go on the 1 minute and look what happened during the day. It might not be a replay to time, but at least you can analyze the market.
Oh yeah. Thanks, Lee.
Yeah, I think it would make sense because it's where the price is right now. It would make sense that you deal with structure right now because you're trying to fall into the pulse of your price. So being it would make sense that you can have 1 minute worth of candles. You can have 24 hours worth of 1 minute candles on a daily basis and keep you in tune with your price. Because moving forward, whatever pair you're choosing, you're getting ready to marry that pair. So you need to know where these ranges are. And you'll master it, and then you'll move on to another pair. And then you'll have 2 pairs. Then you'll have 10.
Whatever it is that you like.
Bark like a dog. A big dog.
No, thank you.
Bark for 30 years.
That's why he went to America to find a girl.
Hey, Sean.
You got about 2 weeks. Get your competition accounts up.
OG, what's a competition account?
I have about, I'd say, we got what? Smart Prop, Rocket 21. Those are the best 2. Rocket 21, it just changed because now they have limits on their lot sizes. So I don't too much care for that. But it's still workable. It's just something to use. It's free. Monthly, you can get into the competitions with the possibility of winning yourself an account. It's good practice because you have to go with the scenarios of, the parameters, the rules of a prop firm, and then just try not to blow the account. I mean, that's really what you're trying to do is get through it successfully and utilizing the rules, right? You don't want to blow your account. Prop firms are not going to allow you to come in there and lose their money. So you need to follow the rules. So every month you get an opportunity to expand your horizons and do better and better and better through the competition monthly, and eventually have a possibility to win one of them. Some of them have a top 100, some of them are top 10. So there's not really a top 50. I haven't seen too many top 50s, but you get the top 100 and then the top 10 in a lot of them. Get up to like 1,000 in some of them, a top 1,000. You get like I don't know where to get these 1K challenges from, but they got 1K challenges. All the way up to 100K. The sky's the limit because the more you have, the more you make. That's the nature of the game, right? All these little trades that people are trying to do. Oh, I'm trying to make $250 a day. Well, there's people that make $250,000 a day, and it's the same lot size. I mean, it's the same move, different lot size.
Right.
Yeah. So it's good to get in there monthly. Don't let that pass you. That's free money. That's free exposure, actually having something on the line. Treat it like it's your money, because that's really what you're building yourself up to do. Take their money, flip it. If you get a 1K account, you should be making 1K. If you get a 10K account, you should be making 10K, and then 25K, 50K, 100K. And then once you get comfortable, okay, you're starting out with the 1K. I'm gonna take the 1K and I'm gonna go buy a 10K. I'm gonna take the 10K, I'm gonna buy a 25K. With the 25K, buy a 50K. By the time you get to 50K, you're already going to like 200K. Like you've already made so much by the time that you get to a 25K account, you're already buying 100K or 200 or 300K. And then you take the 300K and you already flipped it to 600, 800. All right. That's how I made 800 last. Right.
Wow.
Just that's the route. Yeah.
Thank you.
Hey. And you know who's real close? Mark is close to getting up to that 100K. Like, and I'd love to see him do it. It's just he's John Wayne. And he keeps beating it, and then he ain't made it to the payout. Like I'm waiting for him to get to the promised land. It's gonna happen. There's a certain way he like to trade, and if once he gets this capital, he can trade like he wants. He'll never lose again because now he has a buffer and he don't have to worry about it. So I'm looking forward to that with him.
So, are we waiting for the charts on the 4 hour for gold, or are we?
I think Todd had to grab an order. Somebody's at his house right now. So
Oh, well, you to go, King.
he's got the screen.
Oh,
But
I'm
yeah.
gonna say, Uncle OG.
Hey, that crazy uncle. He always he stopped too, man. He just lively now. He be talking real shit. Nah, but
Crazy.
these moves, we're no longer looking back in time. We're in it now. Like you're gonna catch a move where you're gonna get this big monthly candle. You're gonna catch the whole candle. This is what we're gonna be doing normal on a daily. I mean, it's no problem, man. We in it now.
8.
Yeah. But gold is so easy. I mean, everybody eats off gold and then branch off. You have enough capital to go trade any pair you want. It's good to go from gold. I'm going from gold to Ethereum to my currencies, and then into NASDAQ and US 30. See, it's set up right now to catch them at their bottom. They're late, all right? They're still pointing down. They haven't even got into their chalk. Gold was pointing down. It had to get into its chalk. Not only did it get into its chalk, it didn't give you no time, no retracements, nothing, right? So that's what you're looking at in the indices. That's the opportunity you're getting because it might just spike out of there. It might gap out of there like gold did. But I can't trade what I trade and trade the indices. I have to give special attention to indices. I can't let my other trades run like that and be trying to trade US 30. No.
Right.
Else off. Yeah.
I just can't do GM with these swaps and not the swap, but what is it? The market break. I just be like $1,000 per lot.
Oh, the spread.
Yeah, the spread. I'm like,
Yeah,
yo,
the
howling.
100, 300. It's about 200, 300. It was interesting because the first day I was really trading it, I want to say the spread was 200 at swap. And then you brought it up, and then I was like, okay, let me look again. And then swap came again, and it was 300, not 200. I was like, okay, well, I tripping? Because I could have swore yesterday it was 200. This is 300 this time. So, because I don't trade currencies like that. Like, I trade more gold and Ethereum. So I'm still getting kind of used to, what these spreads are doing. And then when you're looking at MetaTrader, you'll see how wide it gets.
Right.
Not as wide as we think it is. It's wide, yes, but it's not as wide as we think. It's not like way crazy. No, I think
I'm
the
glad
crazy.
oil doesn't do that. I'm
Right.
surprised it doesn't, but I'm glad that it doesn't.
Yeah. Those exotics go crazy, and Bitcoin spread goes crazy.
Oh man, that one. I just like I'm not even trying to do it unless I got crazy account.
Yeah, that's why I trade Ethereum. I don't even have to deal with it.
Right. That makes sense.
Now, once this goes to the floor, Bitcoin is the pulse, right? So when Bitcoin hits bottom, like when Bitcoin hit the top, Ethereum didn't hit the top. That's the problem with Ethereum. Because when Bitcoin hit 30,000 again, Ethereum should have hit 2,000. It didn't. It hit 1750.
Mm.
Yeah.
Okay.
So the disadvantage sometimes with Ethereum, it doesn't do exactly what Bitcoin does. That's why you should catch Bitcoin. Like when this is pointing down and you can catch it at the bottom. So we're looking at 20K for Bitcoin, maybe 17K, maybe 15K. Any of those numbers, if it goes down there and starts stabbing into those areas, you can easily catch a 0.01 on Bitcoin.
Mm.
Yeah.
Hmm.
Because that's going to 100K. Ethereum's only going to 5,000. You can catch a 0.01 on Bitcoin. Man,
Yeah.
a lot of opportunities. We're not out of the woods. We're so far from not out of the woods yet. There's so many highs that have to be broken, and then you still got to get the retest. So, and we're just getting to the point where we're not raising the interest rates anymore. So we got to go into that transition. Then we got to get into the results of doing all those interest rate hikes. NASDAQ and US 30, they're proving it right now that you got to come back and pay the piper. So until everything is pointing in an upward direction, there's always room that there's probably going to be some type of a crash. So we're looking at next year, right? Because right now we're heading into this upward momentum because, well, we did the healthy pullback. We were bullish for 6 months, and then we did a healthy pullback, right? It was supposed to keep going down. Okay, nope, it didn't do that. All right, so now we're pushing towards resistance again. All right. For gold, this is going to be the pullback that it just did because we already have a triple top. So now once it goes up here again, that's the fourth opportunity. That means it's going to break it. All right. But on the way, is it going up yet? Because this pull down was a healthy pullback. And now this will be so far a healthy pullback on the drop. So we got to be real careful right now. We're not out of the woods. It did not touch 1800. It didn't go down there and collect the order at 1725. It hasn't done none of that. And the market loves its money. So if it goes down there, it's not going to be by surprise. It wants that. This is the last opportunity for it to get that before this thing goes parabolic. I'm pretty sure it's going to go to 1750 or 1725. But we got time. So we got till next September, October. We're looking for September, October lows next year. That should be it. We should be looking at bullishness from that point on, if we're not already there. So, and whatever's bullish right now is going to be bearish. We're going bullish. Those things are going to come back down and be bearish. That's why we're trying to catch the sell on GN or UJ and stuff like that. Well, I have company, so I can't really run it. If anybody wants to run it, I got time. I'll be here all day with trading Ethereum. It's pushing, right? For any of those that aren't comfortable with what Ethereum does, It likes to stretch off of price when the market's closed and then revert right back to where the momentum pushed from. So, and tech is taking a hit right now. Okay, but Bitcoin and Ethereum are pushing in an upward direction when they should be pushing in a downward direction. So that plays into my hand because I'm looking for this to stretch out and come right back. So now I can plant this cell up in the upper level of structure and let this thing drop down to 1500, 1400, 1380-ish. It's respecting the 1500 quarter. And this is another little micro scale version of the big picture. It's not going to get out of here without touching 1500, just like gold don't need to try to get out of here without touching 1750. That's the quarter level, 1750 for gold. It's 1500 for Ethereum, but it went to 1550 and like 1530 and it didn't touch 1500, right? It's gonna go get it. It's too close. It's too close down here not to go get that. And then when it gets there, it's gonna fool everyone and it's gonna shoot through and go to 1400. Oh, it's a sell, and then bang, it goes bullish all the way to 1750. That's how it moves. I've seen it. I've seen this exact move. The only thing missing right now is a grab at 1400, a fake out, and then it goes straight bullish, and then it catches back up with gold, and now both of them are pointing in an upward direction. I've seen it exactly played out. So right now it's touching 1625. I had a feeling it was going to go up there, and now it's already pulling back. It wicked at 1640 on Friday, and now it's wicked twice, but it hasn't made it to 1640. These wicks are coming up short, and it's a double top now. It's left a double top. If you want to call it a triple top. But yeah, I expect this to pull down, go to 1500, possibly 1400 for the buy, and then go to 1750, 1850, 2000. Like I said, gold. And I didn't continue what I was saying about Bitcoin hitting 30,000. That's resistance. That's the same resistance for Ethereum as 2,000. So when Bitcoin hits 30,000, Ethereum should be hitting 2,000. It's missing. So I'm trying to take this sell right now to go down and catch the buy so that the buy can take me up to where it should have been when Bitcoin got up there. Ethereum is always late. I know that now, right? It's gold, then Bitcoin, then Ethereum. That's how it happened. When everything hit resistance, gold hit it first, then Bitcoin hit it, then Ethereum was like 3 weeks late. All right. Now gold is getting ready to, well, no, Bitcoin hit 30,000 over this week, I believe, right? Let me check just to make sure. Yeah, it's at 30,000 now. See, Ethereum should be heading into 2,000. That's what I'm talking about. It's late. Why is it not going up there? Because it ain't touched 1500 yet. That's what I'm saying. That's what it's trying to do. It shouldn't be heading into 1750. It should be heading into 2000. So we'll see. It's trying to go up there. So I'm thinking it's
Sorry, OG, I think you can share your screen now.
My daughter's in there listening to some music right now, so it's too loud. I can't do it in there.
Okay, sorry.
But if somebody want to share, I can always I can regurgitate this shit. But yeah, I think that Bitcoin and Ethereum are going to catch up with NASDAQ and US 30 because it's tech. It should not be pointing in an upward direction right now.
I have a question.
Hey.
Regarding the new tab that has been created for small accounts growing in the chat, in the Discord chat.
Yeah.
I'm not sure. What I'm not understanding is why put in credentials if we have a small account that we want to grow.
No, it's your choice. It's your choice. If you want people to follow your trade, give them your investor account. Don't give them your trader account. Yeah, I'm gonna put an account in there when I get ready to do it. I'm gonna put my investor password in there so people can go in there and see my trades live.
But they cannot place trades.
No, they're
Okay.
coming in through the investor password. If you want someone that's like, if you want to go work for Charles Schwab, then you got to give them your investor password so they can see what your percentage is.
Okay.
Yeah. It's not a show your profits, and no, we already have a profits page. Do your profits in the profits page. Anywhere, do your profits in the profits page. Don't put them in the GBP page. Put them in the profits page, right? This channel is for accounts that are going to be followed by others. That's the whole reason why you don't have to post no pictures. They can see everything. They just log into your account. And that's why I have to go create another account. I'm not going to give you my personal account. I'm going to make another account, put the money in there, and then give y'all the investor password, and then go trade it. And then for me, I'm just going to be putting 0.01s at trigger points, and I'm going to let them hit and with tight stops.
Nice.
Mm-hmm.
All right. Thank you, everybody. I'm out.
Yeah, I think
Thank
we're
you.
probably
Yeah.
done, folks. Awesome meeting. We'll be
Yeah.
back mañana or whenever.
Yeah, I don't think Todd's coming back because he's busy at the moment, guys. So till next week. Have a great trading week.
You too. Thank
Trade
you.
what you see, not how you feel. Adios, amigos.
Adios.
Who's screaming like that?
I wanted to hear it in your accent. Y'all don't say it out there, huh?
I don't think I can. And plus, it's still
Yeah,
recording. So I will see you later, OG. Have a
I
nice
can
day.
hear it. I hear it.
Okie dokie. Take
Make
care.
a tea
Yeah.
call. That'll be y'all tea call.
It's tea time.
Done.
Okay. Take care, everyone. Behave, OG.